Hey YouTube, what's going on today? Welcome back to another episode of Calvin Lim Investing. As usual, I'm your host Calvin, and today we're going to be doing our weekly earnings preview for the week of April 19th, 2021. It's starting to get into earnings season. We're about to really kick off some of the more exciting parts, and this upcoming week we start to see some tech companies report. So we're just going to go through a little quick review, name a couple of companies that I like, that I might be eyeing, and I'm also going to discuss a couple of strategies that you can employ to play earnings and maybe profit or increase the chance of making profit. So with that being said, couple things to note. My friends and I have built a free Discord called Financially Woke. Link is in the description if you're interested in joining. You can always ask questions. I'm always going to be in there answering any questions and getting to know the rest of the people. Next, if you could just give me a little bit of support, scroll down, smash the like button, hit the subscribe button, yada yada yada. I really appreciate it. And last of all, before you begin to invest, always make sure to do your own research. You might find a lot of misleading tweets, misleading posts by certain individuals. Make sure to do your own research and judgment before you buy a stock. So that being said, let's jump right into it. So this week, it's a full week. We got some big companies. To start off, on Monday, we're going to have Coca-Cola before the market opens and Prologis. If I remember correctly, Prologis has a large amount of shares held by ARRK Invest, led by Kathy Wood. There's also Coca-Cola. Coca-Cola has been trading around 52, 53. Not something I'd want to really play earnings with. And then after the market closes, you have United, you have IBM. United will give us another reason to sort of get a better gauge of the travel sector, but I'm more likely to stay away from United at this point. I do like it a little bit, but I rather own shares and I rather hold them for a longer period of time. So for the moment, I would probably not play United just because last week Delta reported earnings and Delta dropped, and I'm not sure what sort of reaction United shares are going to have. IBM has disappointed the last couple of times. Let's take a look at IBM. So let's see how so IBM, you can see the last time reported earnings was late January. It had a little dip. Same with in October. So it tends to disappoint after earnings. So I might play IBM puts, if anything, but I'm looking to either grab a really small amount of IBM or not touch them at all. Tuesday is where it gets really interesting. You have Johnson & Johnson, you have Abbott, two pretty cool companies in the health and medical sector. Johnson & Johnson obviously had some trouble with their vaccine, but if their vaccine program gets restarted and they do start providing a lot more vaccinations, I do feel that they are going to be a moneymaker. Netflix is the very interesting one. The first of these tech and fame companies that are going to be releasing earnings. Last earnings, Netflix blew everything out of the water. The previous one, they dipped. So Netflix would actually probably be a really good company for me to play, for me to test out a new strategy known as the reverse iron condor. This means I buy a call and a put at about the current price of Netflix, and then I buy a call or put at the current price of Netflix, and then I sell a call and I sell a put that are equidistant from its current price. So it's instead of two credit spreads as an iron condor, it's a reverse iron condor because I am doing two debit spreads. And Wednesday, or you got Verizon, Lam Research, Chipotle. You do have some pretty nice companies. Discover Financial Services is one to be on the lookout for. The finance sector has actually done pretty well lately. Discover is trading at $102. That's almost its 52-week high. So believe it or not, I actually owned Discover right when it was in the 65 range. It dipped. Yeah, I lost almost 50% of my investment. It started to climb back up, and I sold out for either a small loss or a small gain. I was sick of looking at it, but I actually think Discover has a chance to be a potential major player in the card industry. I don't think they're ever going to be up there with Visa and Mastercard, but I think they can be, a solid financial company, especially since they do a lot of loans. Let's see, they made $5 billion last year. Before that, they're making about $8 billion a year with a $31 billion market cap. Oh, that's not too bad. Let's see how they look compared to Synchrony. Synchrony is making 24, is worth 24 billion. They made about 9. So maybe Synchrony is undervalued, or Discover is overvalued. But it's one that I'm looking at. And then you obviously have Spirit here. Another airline to be on the lookout for. But Spirit is more of a budget airline. So the company could be in a different position compared to the other normal travel airlines. Then Thursday, you got AT&T, American, Southwest. Nothing too crazy, but then you have Snapchat. I think Snapchat's going to be a big one for earnings. It's going to set up how things look for other social media companies such as Pinterest, Twitter, and Facebook. So I think looking at Snap, it can give me a better idea of how I wanted to play Facebook, Twitter, and Pinterest earnings if I do intend to play any of those earnings. And I currently bought 100 shares of Snapchat last week to play earnings. So what I did was I bought 100 shares of Snapchat and I sold a $75 call. I'm happy with taking 100 shares from $62 to $75 and selling it out at $75 plus the premium, which is going to be whatever I sold that call for. So I am playing Snapchat. I'm already playing it. I'm already locked in. And then Friday, you got, American Express. I'm going to be looking at that. I do really like the company. I am looking to buy American Express shares. So with that being said, the one I really do feel like playing this week is going to be Netflix. And I will be looking to do a reverse iron condor. So looking at Netflix, it's trading around $546. And we're going to be doing a reverse iron condor. So let's log in real quick. Alright, so we're logged into Robinhood. Let's go to Netflix. I haven't really been using this account. It's just been testing out some new ideas. So Netflix, what we're going to do, I want to do a reverse iron condor. I'm not going to be doing this in Robinhood. So I mainly trade out of E-Trade and SoFi, and I usually use Power Trade E-Trade for all my trades. So what I would like to do is you're going to be buying a call right here. You're going to be selling a call, let's say $10 above, right? So you'll sell this $550. Yeah, you'll sell this $555 strike. So that means by buying this, if it hits, your max gain would be if it hits $555, your total cost would be $472. And let's see, you're gonna be buying a put right here, and you're gonna be selling a put that's lower. So we did $10 out, right? So you're gonna do $10 out. So it's gonna cost us $955, right? And what that says is you're hoping it moves in either direction enough so that you'll profit. So you hope that it falls out of this 535 or 555. It extends beyond those boundaries, right? So, but what I want to do is I want to be a little bit more conservative, and I'm going to actually go right here. And I'm going to go $5 out, right? So it's only going to cost me $458. So for example, if Netflix goes up to about, it goes above 550, right? My 540 put's gonna expire worthless. My 545 put is gonna be expiring worthless. And then my 550 call is going to be hit. Right, so ideally my profit would be $500, but my total cost is $498. So I have to hammer these kinks out and can kind of do the math a little bit. But let's go. But this is basically what I do plan on doing. It's gonna net me. I feel like it's gonna net me a guaranteed gain, but I gotta do the math a little bit. So right here, if it moves from 545 to 550, right, I'm gonna be keeping the 1780 in premium, and this is gonna be invested, or it's gonna be in the money, right? So this would be 0, this would be $500, and that'd be my gain. So in this case, so what I have to do is I have to make sure that my total cost is less than 5, right? So I'm gonna be trying to figure out how to get that number as low as I can before Thursday, so that, you know, if it goes up in either direction by more than $5, I can get a profit of $500. So that's what I do plan on doing with Netflix this week. Yeah, so that's just kind of my plan and how I do feel like I want to trade Netflix options. So with that being said, another idea you can do is you can do a straight iron condor. Since it's earnings week, premiums are a little bit more expensive. What you can do is you can go all the way up to, let's say, 650. You know, sell the 650. You're gonna buy the 660. You're gonna go to the put side. You're gonna sell. Let's see. So 650. It's about $100 off. You're gonna sell the 465 maybe, and you're gonna buy the 455. So, you know, if you do one of these short iron condor, it's gonna cost you you're gonna get $51 for putting $1,000 down. Not great risk to reward ratio, but you can narrow your condor a little bit to keep some more of that premium. You know, for example, I like to try to find these increments of 5. What you can do is, let's say, you know, you wanted to do something like this. Let's go up a little bit. All right, and maybe let's get a little bit more narrow with the call side. Let's go to like 630. So here you get, you know, a 10% return about. You can sell this for about $105, the spread. It's basically saying that, hey, if Netflix closes between $480 and $640, you make $100. Otherwise, it starts eating away at your collateral, which is going to be $1,000. So as long as it expires, as long as the price of Netflix holds between this range, you are going to be profiting, right? And that basically is what an iron condor is. So these are just two of the ways, or two strategies, that I'm probably going to employ this week to play Netflix earnings and other high volatility tech earnings. So with that being said, guys, thank you guys so much for tuning in today. I hope you had a great time. I hope you kind of got a nice little preview for earnings week. As I said, earnings season is just about ready to kick into full gear, starting with last week with a lot of financial companies, and rolling into the next 2 to 3 weeks, we're going to see a lot of big tech companies reporting earnings. So stay up to date, stay tuned. I'm going to put up a weekly preview video every Sunday, and I hope you enjoy. Thank you guys so much, and be sure to hit the subscribe button.